JBlog 2009, November 15th. Starting out today, looking at oil. Oil broke through the 75 resistance here and then ran up during the last 2 months and reached a high of 82 right here and has since dropped down to 77 from a very overbought position according to the RSI, and is currently seems to be undercutting what was support. So we'll have to see where that goes. Oil, of course, is a resource that can be traded all over the world, where natural gas is sort of localized. And natural gas, this is the natural gas chart. Natural gas has not been doing too well. Down here I got into natural gas and I sold natural gas somewhere up here. Actually, I don't remember where I sold it exactly. Somewhere up here. Didn't run all the way to the top. It was starting to get too expensive. Now natural gas is once again dropping. I'm glad I am out of it. And it once again indicates that there's not too much need for energy in North America going forward, and therefore the price is dropping. So we'll see how that goes. Gasoline chart is similar. Gasoline is once again dropping off a little bit here. The commodity index in general has a similar pattern. Gold, of course, is the front page story on all the newspapers. Gold has been running up enormously, mainly because everyone figures that the US dollar is coming to an end. That is very interesting, that gold is finally bouncing up so high. Should make the gold bucks very happy. One thing that is interesting to observe is silver is not following gold's lead. It has actually made a head and shoulder formation here. It's actually a very clean head and shoulder formation and is still somewhere around 17. Copper once again has made slightly higher highs here, but not very much higher highs. So from that point of view, inflation simply isn't in the cards, because if it was inflation, then all of the commodities would go up together along with gold, and this is not happening. So that's something to keep an eye on. The US dollar is still bad news. That trade is going against me right now. I'm long US dollars. Having said that, the US dollar has put in a double bottom here. Well, actually, it has undercut the double bottom just a slight bit, has then bounced, and on Friday had another bad day and fell down a little bit again. We'll see how that continues. But seeing that I seem to be the only one on this side of the trade and everyone else is on the other side of the trade, I don't mind holding this for a little while longer to see where this might go. The market itself is again showing us an interesting configuration here. We have a kind of a crooked head and shoulder, potential head and shoulder formation here forming. The right shoulder is not quite formed yet. Price charts don't tell us a lot right now, but what is telling us a lot right now are the technicals underneath, RSI being the most telling, that we're making higher highs here, and of course we have not made higher highs in the RSI, so this price rally is not being confirmed by the technicals. Will it ever resolve to the downside? I really don't know. But another one, volume is dropping off as the market is trying to make higher highs. Stochastic bounce is not quite as high as it was before. Money flow, CMF, is showing that there is money that is flowing, seems to be flowing out of the market. Of course, that makes no sense whatsoever, because for every person selling, there has to be a person buying. So sometimes these indicators are a bit strange, because I mean, what exactly does it mean for money to be leaving the market? Um, OBV has been flat over these higher highs. So we'll have to wait and see how that resolves itself. So that was the New York Composite. Here's the S&P, same picture, same technicals, same everything. VIX has once again fallen down, not quite as far down, but fear has once again left this market. This was that increase in the US dollar that scared everyone, but now that the dollar is dropping again, everyone is back in there and trying to squeeze out those last 5, 10, 15%. Stock Charts has a very interesting feature, and they're evaluating with their point and figure charts how many charts are considered bullish and how many charts are bearish percentage-wise on the S&P 500. And this shows that even though the market is making higher highs, the number of charts that are considered bullish by a point and figure charting is actually dropping, which happened back in 2007 October. Um, the the last few weeks, the market was carried higher by fewer and fewer companies. One of those companies, obviously, being Google and Apple and all the other um, ones that the more and more money started piling into those, because those were the momentum plays. The Russell 2000, again, Joe Granville always says that the small stocks will collapse before the big ones do. The Russell has definitely not made those higher highs, so it is very weak, being made up of small stocks. But looking at one of the bigger stocks, like for example Apple, I mean, wow, it just keeps going on. There's nothing that seems to be stopping this freight train. It just keeps going. One that I'm personally short is Goldman Sachs, and even though that might be considered suicide, but Goldman Sachs has been quite weak as of late, and even it's definitely not as strong as an Apple. So if Goldman Sachs is the indicator of the financial industry, being the most visible of the stocks in the banking and finance world, it's definitely not looking very strong. Um, so we'll have to keep a close eye on that one and see how that goes. A few things I wanted to bring your attention. Here's a fascinating story. It's a very long story, but it's well worth reading. This is the Dylan Reed story. Of an insider talking about how money is made in the shade on Wall Street. It's dunwalk.com. I'll put a link in on the um, when I publish this blog. It's, as I said, it's a fascinating read. Definitely take the time. It'll take you a few hours to read it, but it's well worth the read. To read this one and see what Catherine has to say on the soft underbelly of the U.S. stock market. What else do I have? That's another chart of Goldman Sachs. Goldman Sachs has broken its first trend line, is working on possibly breaking its second trend line. Again, that is very interesting. And another guy I've come across, I've heard him before, and he's got some very interesting models. Ian Gordon, the longwaveanalyst.ca, talks about there being a long-term cycle that works its way through, each one of them being 15 years old. Definitely have a look at this site. It's well worth the read. Anyways, my 10 minutes up, so I gotta go. Have a good week. Good luck and make lots of money. Bye.